Well, guys, Christmas came twice this year for us SBA lenders and for small business owners and anyone really involved in SBA lending for that matter. Though it was long overdue, Washington came through and gave us basically everything we asked for in order to help deliver some much needed stimulus to the small business community and therefore the economy. We're talking free payments, we're talking guarantee fee waived, and we're talking the 90% guarantee that we've all been talking about for months and months, and it is actually here. These incentives are sure to pull small business owners off the sidelines and motivate them to pull the trigger on their next big investment, thereby creating jobs and adding to the economy. And it all makes sense to me and sounds great, right? Well, I think the answer is basically yeah. But since this is the Art of SBA Lending podcast and you're probably an SBA lender, I'm going to talk about what this means for us lenders and what our next move should be, and perhaps discuss some of the unintended consequences of this stimulus bill. First of all, and this still has to be sorted out by SBA, SBA still has to provide the technical guidance to the lenders, but for now I'm just going off the text of the bill. But so first of all, the SBA is bringing back the 6 months of free payments for newly made SBA loans. Only this time they're capping the payment at $9,000 a month. Not sure why. My guess is to stimulate smaller loans under $1 million, because depending on the term and the loan amount, the entire payment is going to be waived, or not waived, but paid for by the federal government on smaller loan requests, versus the larger loan requests where only the first $9,000 is going to be covered, and maybe that's half or a quarter of the loan payment. It all depends on the term and the size of the loan, but the dollar amount is going to be the same, $9,000 a month savings. It's just smaller as a percentage when it comes to those larger loans. So here's what it boils down to for us. PPP loans are also coming back at the same time that demand for the regular SBA loans is going to increase. This is actually different than when PPP first launched. When PPP first launched, a lot of lenders kind of froze their regular lending to set up PPP. Now this time, we're kind of already set up with PPP. We kind of get it, though the rules are different this time, but this is still uncharted territory for all of us. Now that being said, both of these programs are coming back at the same time, so I think capacity becomes the issue. Plus, anytime there's a deadline, which is September 30th, 2021, a bottleneck starts to occur as we approach that deadline. And even though we all know it's coming, there's going to be people trying to get in at the last minute and they're going to miss it because they started their transaction too late. Demand will be strong and steady through June, but then in July, August timeframe, it's going to spike even higher. So, of course, we'll educate the marketplace on this deadline, just like we do every year with closings that need to occur by year end, but we all know that only gets us so far. We still have those last minute scramblers. Now, I think the shops that are nimble and can expand quickly to help as many small business owners as possible will do best. I also think that shops who have individuals in the shop trying to do both PPP and 7A will suffer. You should separate the two and have dedicated staffs for each. Now, as a BDO, finding transactions becomes less of an issue. They will appear, trust me. It's more about finding the right transactions. And more importantly, it's how you handle each of these transactions. Are you going to dump a half-ass package into credit because you're super busy and let your team do all the work? Not a good idea, right? Don't let the fact that you're busier than ever become an excuse for shoddy workmanship. And you've got to help shepherd these deals along. The team and the business owner needs it more than ever. And I get it. You're going to want to capitalize on this opportunity. But remember, you can only stretch yourself so thin. Take on what you know you can handle. You're going to have an awesome year regardless. But if you take on too much, you risk more blow-ups in underwriting and more blow-ups in closing because you've cut corners or you didn't nurture the loan enough on the front end. Sometimes you think you're being efficient because you're submitting all these loans to credit. But if only half of them close, you're actually being less efficient. Ultimately, I think there's going to be such a great demand for this product on the bank side that banks are going to want to book virtually unlimited amount of these 90% guaranteed loans. Their hunger will not be satisfied, and that's going to lead to increased competition. Banks are either going to have to do riskier credits, cut their pricing, or pay higher referral fees to get more loans through the door. And while that could be a negative consequence for us BDOs, that's actually a really good thing for the small business community. And it kind of goes back to what I was saying at the start of this. By the way, what we consider to be a riskier loan is still a much needed loan for that small business owner to start, grow, or improve cash flow. And maybe it's just a really high loan to value, or maybe it's projection based, or maybe it lacks hard collateral altogether. But that doesn't necessarily make it a bad loan. It's just a little further down the risk spectrum than you're used to. But that's the whole point of the 90% guarantee. I really believe that this is going to help spur the economy. Remember, small business accounts for like half the jobs in our country, and 99% of privately owned businesses are eligible for our loan program. So this has the potential to be huge. I wish PPP side came a little sooner, but the enhanced 7A and 504 programs are right on time. So get out there, be targeted in your approach, educate, try to refrain from going on LinkedIn and yelling, free money. Differentiate yourself a little by diving into the content a little bit deeper for folks, unravel it, add your own opinion to it. Remember, we have a 9-month window. Pace yourself. Hopefully you're at a shop that has the ability to step up to Congress's call to lend and is expanding the back room to keep up with this demand that we're about to see, and actually is willing to use the 90% guarantee to make loans that they otherwise wouldn't have. It's going to be another insane year for us, but I encourage you to, take it one day at a time. And that's it for us today. Thanks for tuning into the Art of SBA Lending. Have a great year.